Let's take a look at some charts on Tezos from this week's article on Brave New Coin. So Tezos is a staking coin that uses a staking mechanism. Relatively new as far as the coin is concerned in the group of other staking coins that are, in my opinion, worth paying attention to. ADA recently switched to proof of stake, or is in the process of switching to proof of stake. But of the group, Tezos has the largest total notional value staked. They have 80% of the network staked. I say this every analysis video, but it's like there's nothing else to do with Tezos at the moment, which is fine. A high staking percentage just removes it from the sell side of the book. So if there's any demand at all, price tends to go higher than it typically would, just because the staked coins aren't waiting to be sold on the order book. Now, the way the staking mechanism works is it's not necessarily locked up for any guaranteed amount of time. The user can just move it from the staking wallet to the exchange wallet or the trading wallet and sell it. So it's a bit of a mirage, but it's good to see where the circulating supply is sitting. If we compare Tezos and all these other coins to a few metrics, it's kind of second or third in a lot of these areas. I left EOS off this list because it's hard to get reliable data for most of this stuff. I think the daily active addresses is probably the most interesting, considering it's lower than Tron, Dash, and ADA, all three of which are questionable chains from a metrics perspective, just because Tron is free to send transactions, Dash uses on-chain mixing, and ADA's, like I said, going through that proof of stake process. But you'd think the Tezos daily active addresses would be slightly higher comparatively to everything else. But again, this just tells me no one's really doing anything with ADA or with Tezos other than sort of collecting interest through staking. If we look at the notional values of all the staked coins, you can see Tezos number 1, EOS, ADA, Algo, Atom, Band, Tron, SNX, Dash, Dot. So those are the big ones. A few of the new ones are, the Atoms, the Algos, Band, Dot, SNX. But overall, Tezos and EOS and ADA definitely up there at 2 billion notional on any given day, just held in a staking mechanism. For Tezos specifically, 20% of the coins are sitting on exchange bakeries, which, as I say every analysis video, is a centralization issue. It will always be a centralization issue. As soon as the exchanges have a governance decision that benefits them and not the users, they will likely vote for their best interests. This means users need to move coins off of the exchange if they disagree with how the exchange is voting. Just one such example of centralization. This has already happened with Steemit on Binance, and as far as stuffing ballots for initiatives that a special interest wanted, and not necessarily the community. So Coinbase has most of it, then Binance and Kraken. Then the rest of them have relatively smaller slices here, but nearly 45% is on Coinbase. If we look at the validators on EOS or Tezos, too many OSs. Similar to EOS, there are validators that you can sort of put your Tezos behind, and the bakers get sort of a better yield than just the stakers do because they're a validator. They have to have a certain bond size in order for people to subscribe to their validator, because if it's oversubscribed, then the staking yield goes down. Of the validators I checked that were oversubscribed, Binance is 2 million Tezos over, so I think they need to buy 200,000 Tezos in order for everyone who's staking to get the expected yield. Otherwise, the payouts are going to be less. If you look at transactions per day and average fees for Tezos, one thing that immediately sticks out to me is the fees are skyrocketing on sort of very little transaction increases. So it tells me there's a scaling issue here. Something's going on with the staking mechanism, most likely, because if we look at daily active addresses, they're at an all-time high now. So there's lots of people staking individually, and I think this is not scaling very well as a whole for the chain. So if these transaction fees increase, this is like nothing. It's like 0.18 USD right now. But if they were to say increase to multiple dollars like Ethereum, I think we'd have issues with staking. it would become even more centralized, most likely into validators that charge the lowest fee, basically, which would probably be the exchanges. If we look at NVT, which is an inverse metric of economic utility, it's kind of flat, which isn't bullish or bearish, just neutral, but it's flat at the historical low, basically, around 100. So all in all, this says despite the increases in market cap, the on-chain utility is sufficient to support the increase in market cap. So together, the transactions per day, the fees, the active addresses, incredibly bullish in a vacuum. And to see NVT not rapidly increasing is also extremely bullish. If we look at Google Trends, they've been increasing over the past several months, almost reached a new high a few months ago, and they're still increasing again. So this is all bullish for Tezos. It says people are coming into the market, price is pushing all-time highs, which it is. Anytime you see that, you get a lot of headlines, you get a lot of people trying to get into something that's pushing all-time highs. If we look at some technicals, Bitfinex long shorts, yearly pivots, VPVR, RSI, volume, 50 and 200 EMAs. First thing I noticed was these longs on Bitfinex. So they've been like this for a month now, but you can just see it's like 97% long or something. You can just see where most of those longs occurred, kind of at $3. So they're going to have to get pushed way below $3 to have any fear of getting underwater, really. Right now they're in profit. As they get more and more in profit, they'll start to close, but currently, despite the severe imbalance in open interest, I don't expect it to affect market price for any reason here. VPVR has a lot of support between 250 and 3. There's a yearly pivot at like 265. There's yearly pivot support at around 370. There wasn't really a bearish div on this like there was for everything else. And if you compare this to everything else, it's kind of lagging in that even though it's making all-time highs, if you look at BTC, ETH, and a lot of these other coins, they're way past their March highs at this point. 15 to 200 have been bullish since last year. So all this looks incredibly bullish, just lagging the market in general. But I do like where it sits, even though it's kind of stalling at all-time highs here. If we look at a pitchfork for Tezos, just a trend channel with specific rules, we can see kind of how much it's lagging its other coins. If you compare again, BTC and ETH, they're kind of past their midline of the pitchfork here. So $9 Tezos isn't incredibly crazy to think about, just considering this is the rate of change for the trend. That's where I expect it to go, at least within the next 6 months. I expect it to return to the median line here. I don't expect it to breach below support. 36 isn't going to happen, I don't think, anytime soon, but that's the upper resistance. 36 is like the link target. If this chart starts to look like link, 36 is where it's going. I don't expect that to happen. If it starts to look like BTC and ETH, 9 is where I expect it to go. And if the entire market starts dropping off, it'll break the support and this trend will be invalidated. If you look at the cloud loves it. It's above daily cloud. TK Cross is bullish. Cloud is bullish. All this looks fine. You can see how much it's just ranging though with the flat TK, the flat cloud. This just says it's kind of done nothing at highs in that, made its higher high and then it just went sideways. So it's going to need to find some momentum in order for the trend to look more appealing. This is a much more appealing bullish trend where it's pushing highs day over day versus making a high in 3 days and then going sideways. And lastly, on Tezos BTC pair, using all the same metrics, there was a bear div here on the most recent high, and it was a bear div into the yearly pivot, which is usually strong resistance. It just says the momentum just can't push it past that. Not only was it the yearly pivot, but it was basically the all-time high that's been tapped twice before. So it's going to need to find some momentum to push through that level, definitely. Plenty of support kind of at the current level. Cloud looks more neutral than the USD pair. But you can see it's less about trend and more about this range. This might range for 3 to 6 months, but until it's above or below, the expectation is it's just going to keep ranging. So fundamentals look great. On-chain stuff looks great. Google Trends looks great. USD pair pushing all-time highs. And BTC pair likely to continue to range for the near to midterm.